Hey everybody, Boris PK Forex. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for January 15th to January 19th, 2018. And the story with COM dollars is kind of relatively interesting because of the various idiosyncratic stories that are sweeping through on the COM dollar land. Most specifically, the caddy, which is really going to be the central star, not just of the COM dollar universe, but pretty much I think of all the FX universe because it's the primary event this week on the calendar. As far as the Aussie goes and as far as the Kiwi goes, the ranges are going to be much more contracted. They're definitely getting a little bit of a benefit from the anti-dollar flows, but a modest one. They are continuing to be the low volatility version of the more wider ranges of the majors with very, very little of material news coming out of them. On the range front, when we're looking at the levels, they've moved up. Aussie now comes up to a very, very key resistance of 80 with support at 78. Dollar CAD is going to be the much more interesting story, and really these are just the starting edges of the range. Depending on what happens this week, we could certainly blow through one or the other end of it quite quickly. And Kiwi actually probably the most compressed of all and still remains at the 73, 72 level. There's nothing much on the economic calendar for Aussie or Kiwi. We basically have just one thing for Aussie, which is the employment data coming up on Wednesday. That has been a surprise to the upside last few times, but really immaterial relative to monetary policy, which is really the only thing that matters, because the RBA seems to be completely and firmly in the neutral camp. The needle would have to move tremendously one way or the other for Aussie to get stronger. Having said this, though, we did have finally had a ray of sunshine as far as other economic data last week with Australian retail sales improving materially, which suggests that maybe there's a slow turn here that's positive as the economy weans itself off the pure commodity production and becomes a lot more balanced. That provides perhaps a second wave of growth and could put the RBA back into a tightening mode, but nowhere near at least the first quarter, perhaps even the first half of the year. So Aussie, a yield story for now, but a modest yield preference and sort of a low volatility trade. Kiwi has nothing, and Kiwi is just sort of a even a tighter version of the Australian story. The big story this week will be the Canadian Bank of Canada central bank decision, which comes in on Wednesday. The market is already factored in a 25 basis point hike. The market is pretty much convinced the BOC is going to tighten. Data out of Canada has been superb. They've generated 150,000 jobs over the last 2 months, which is equivalent to about 700,000 jobs in the U.S., much faster rate of growth up north. But, and this is the tremendous but that has just completely sideswiped the bullish CAD view, there is tremendous amount of uncertainty regarding the NAFTA negotiations. Canada has been the primary beneficiary of the free borders between Canada, U.S., and Mexico as far as flow of trade. 80% of all Canadian trade goes south of the border to the U.S. The Trump administration has been incredibly reluctant to allow the kind of free trade flows that have benefited both three countries over the last couple of decades. And I want to renegotiate the deals, of course, all in the favor of the U.S. Side. And because both of the other countries are much smaller, much weaker on an absolute economic basis, not on a relative economic basis, people are worried that the Trump administration could scuttle the NAFTA deal, which would really put a very, very cold pall over the Canadian economy. And as a matter of fact, the really big story here is there's a small but not an insignificant chance that the Bank of Canada may decide not to raise rates on fears that the NAFTA uncertainty could really create a tremendous problem for the economy. So there's a lot of narrative here that is going to get resolved one way or the other when the BOC makes a decision on Wednesday. You'll be watching that very, very carefully. We can take a look at the charts here, and you'll see what I mean about low volatility. Let's start with the two antipodeans. Here's the Aussie. This is a weekly chart. Yes, it's very beautiful, beautiful uptrend from the 75s. It's made 400 points over the last 5 weeks. But we're coming up against pretty significant technical resistance at the 79, 80 level. This is really a triple top formation going all the way back to 2015. Very unlikely we're going to barrel through this unless the dollar gets just monstrously weak. I mean, unless basically the weakness of the dollar that we could see is essentially going to become a currency crisis, a crisis of confidence in the faith and the execution of the U.S. government. I don't think we're anywhere near that point yet, but that's the only way I can see the Aussie really barreling through towards the 81, 82 level. For now, it's very likely we're going to come up here and pause at very minimum, and that's probably going to present a pretty decent area to short for at least a small scalp to the downside. Kiwi, same kind of a thing. Kiwi facing very nice stiff resistance here at the 73s, so we're very close, maybe about 50 points higher. So all of the Aussie Kiwi trade here faces a slow slog, I think, going forward, and could be a relative weakness trade on the crosses. We'll take a look and see what possible cross combinations could help us, because the acceleration, I think, in either Kiwi or Aussie will, to the upside, will be slower than any acceleration from all the other pairs against the dollar. Now, the CAD story, this is where it gets very interesting. So we've had the move up. We had a complete rejection, very, very bullish move off the Canadian economy, dollar CAD coming down. But this whole NAFTA thing completely threw a wrench into the whole equation. We're now essentially sitting at a higher low. And if BOC does not prove to be as hawkish as everybody thinks it is, we can take out the 26s, and then the chart really looks very negative. Then we're basically looking at a higher low, negative to the CAD, positive to dollar, meaning the dollar CAD could really come right back up and test the 29s over the next couple of weeks. So this area right here, this whole 24 area becomes very crucial. A hard break here takes us all the way down towards the 20s, but a stall could push us right back up to the 29s with a higher low on the move. That's how the week shapes up in COM dollars. It's really all going to be about Canada first, foremost, and last, and we'll be watching that very carefully. Wish you guys the best luck, the best trading. Boris, over and out.